our interesting topic coming through, you can see it on the screens, is Modern Digital Asset Protection Strategies, which will be presented by Dr. Ulrich Eder, President of PUGNATORIUS SA, based out in Panama. Over to you, sir.
So I will request everyone to settle down, and we are starting up with the presentation now. Over to you.
Thank you. I promised you something interesting. I hope not to disappoint. So we talked already about digital data protection. So the link to digital asset protection is quite narrow, I guess. The term modern digital asset protection strategies is maybe not well known. It's more or less my invention to do it. I want to talk about 4 topics. First, the crypto over the counter. Second, crypto property, which means investing. Number 3 is crypto shopping, which means consummating. And number 4, then crypto offshoring. And it's all about cryptocurrency, as you guess. Please read this. Thank you. So what does cryptocurrency mean? Mainly these 8 different topics. It's, of course, the king, Bitcoin. It's Monero, which is a privacy coin. Some of these cryptocurrencies, of these coins, of the tokens, are qualified as securities under local laws, under US law. Some are utilities, which have the function of a utility. There are tokenized assets, where you can own a fractional ownership in a yacht, maybe, or you can own a piece of gold by this coin. And then there are NFTs, that are these funny bought apes and other NFT types. And we have stable coins, which means one coin, one UST tether is equal to $1 US. And there are the future CBDCs, the central banking digital currencies of the future, maybe as a dystopian future. So, asset protection typically means to safeguard your assets from your ex-wife or your ex-husband, from future bankruptcy in your business and so on. This is not what we are talking about. Yeah, we're talking about to protect digital assets, to protect digital and the privacy and the wealth of a crypto wealth owner. So we start with crypto over the counter. Let me give you 2 use cases which might sound a little bit weird. Use case number 1 is you have an old computer and you find on your computer 1,000 Bitcoin. Yeah, 1,000 Bitcoin, you can buy it 10 years ago, maybe for $100. Now they are worth $28 million US. Use case number 2 is you find in your cellar, you find $10 million in a suitcase. And you say, okay, maybe it's a good idea to use this to buy Bitcoin. How can you buy Bitcoin? How can you buy cryptocurrencies? There are in principle 4 different possibilities. I will put the slides on the website so you can see it later. So no need to make a photo of every one of it, but of course you are free to do it if you like. So there are, and if you are not at all familiar with cryptocurrency, then you might waste your time in the next 22 minutes. Sorry for that. But if you are talking about digital data, then you should have a more or less rough idea or a very good knowledge about cryptocurrencies, and already heard the term blockchain some minutes ago. So I think you know what we are talking about. You know that there are exchanges here in Dubai and in all over the world, which are centralized, where you can buy cryptocurrencies and where you typically have a regulatory framework to do so, which means you have to fulfill certain know your customer requirements, and you have to give evidence, for example, where your cryptos are coming from or where your money is coming from. So if you come with this 1,000 Bitcoin out of nowhere, then some eyebrows are raised and some questions are asked, and you might have a problem to use such a centralized exchange. There are decentralized exchanges, typically on the blockchain, where you can exchange 1 to token against another token. They cannot accept fiat currency, which is they cannot accept US dollars or other currencies, because it's just a smart contract on the blockchain. And there is no know your customer verification, because there is no regulatory framework typically for this. Then you have a so-called OTC desk. That's an over-the-counter desk. It belongs to one of the crypto exchanges, and there you have a different legal structure, but you have full know your customer verification. You have a regulatory framework. And now comes this private OTC trade. So of course you can find someone in an advertisement in a newspaper, and you can make the deal at a Starbucks cafe. You hand over the Bitcoin, you get the money, or other way around. This is possible, but it's of course not the typical way. The typical way is to have it in a big transaction and to have it in a certain way, which we will talk about it. And now we think, what is the best way to go ahead? And it's very clear. There are certain benefits of the regulations. You have a certain customer protection. So if the guy in the Starbucks runs away with your Bitcoins without hand over the money, you are in bad luck. And there's some other customer protection things if the cryptos are lost and so on. For the government, of course, it's a benefit to have this regulatory framework. And they are also happy that you have to be tax compliant, because everything is registered, everything is surveilled, and you have to do it. So the bad implications of the regulatory framework is there is this surveillance. Everyone knows everything about you. There might be certain prohibitions. For example, here in Dubai, if you want to transfer Monero, that's a privacy account, it's simply not allowed. Yeah, for some weeks now, I guess it's even a criminal act. You're not allowed to do it, to transfer any form of Monero or to make a business transaction with such privacy coin. Then there are sanctions. I don't want to talk too much about it, but of course, yeah, there are some states and also privacy institutions who have some issues with the worldwide community. So to decide to do it privately, private to private, means you have some self-organized protection. Yeah? So you are not helpless if the guy runs out with your Bitcoin from the Starbucks, and you have extended privacy, and you avoid all the hassles which come with the regulatory framework. So we did some of these transactions in the past. However, you should be aware, in the moment we are in a development from a bear market to a bull market, so the prices are going up. And typically, a crypto millionaire will not sell his Bitcoin or other assets because he expects that if the price will go up and in the next year there might be different values. So this is a typical structure of such a transaction. Yeah, you have the Bitcoin seller and the Bitcoin buyer. The buyer typically pays with US dollars or whatever he wants to use as a means of payment. We have here the problem, as always, yeah, who should pay first? Should you first transfer the cryptocurrency, or should you first do the money transfer, or however it is paid? So in some cases it makes sense to involve some escrow agent. Yeah, so and this is what we typically advise to do. That in the first step, the buyer pays the money to an escrow, maybe to a bank, and then as a second step, there is the transfer of the Bitcoin directly from the Bitcoin seller's wallet to the Bitcoin buyer's wallet. So the wallet is a place where the key for the coins are stored. So we have a wallet-to-wallet transaction. And then if this is confirmed, then the bank will transfer the dollars to the account of the Bitcoin seller. This sounds easy, or maybe it does not sound easy, but it's much more complicated like it sounds, especially if you're in the middle of the transaction and there are new issues which show up. And here I have mentioned some of this. The Bitcoin is not really fully anonymous. Yeah, so you can see the tracks it has in the past and it has in the future, the coin history. And the payments, yeah, of course, it's much more easy to have a SWIFT money transfer from the bank than to have your luggage with your 10 million US dollars in it. So there are certain details. Yeah, should you use one escrow agent? Should you use 2 escrow agents? And what are the requirements under the regulatory framework? Yeah, the best situation is if you can say, we don't have any regulatory framework, it's just a private business. Yeah, you can sell your Lamborghini easily in a cash transaction, no one worries about it. And you can do typically the same with Bitcoin. That's all what I'd like to tell you about this crypto over-the-counter. And now we're coming to the second chapter, to the crypto property. This is the idea to say, okay, now the crypto Bitcoin is at $100,000 next year, and now I want to invest in property, in real estate. You might buy an apartment here in Dubai. You might look for another beach villa in Bali, or wherever you like to invest. You might say, okay, I want to have an investment property as well. And this is what is coming up now. Yeah, and here it's you see it, Engel & Volkers, one of the big real estate agencies in Lugano. They have their advertisements: buy or sell your house with cryptocurrencies. And this is a market in its infancy. One reason is that in the moment, yeah, the price is going up, and in the moment it might not be the perfect idea to waste your cryptocurrencies for real estate. So if you say, okay, I want to do it, you should understand that there are different transaction structures. And here are 3 of them, or the 3 of them. The simple one, it is just wallet to wallet. Yeah, so you have a seller, you have a buyer, both want to use, let's say, Bitcoin to do it, and the seller transfers the property, and the buyer transfers the Bitcoin. No further questions asked. In some jurisdictions, this is no longer allowed. For example, in Germany, and there are some others, I know in Monaco, and where they say you are not allowed to use cryptocurrencies or gold or cash to buy real estate. We have 2 other structures. One is that you say, okay, I use my Bitcoin and transfer them to an exchange. At the exchange, they are transferred into US dollar or Dubai dollar, and then the seller gets such fiat currencies, which means so he does not need to have a crypto wallet. He gets normal currencies, governmental currencies. And structure number 3 is to say, okay, I have my wallet with my cryptocurrencies, and I want to buy a house. So I go to my own cryptocurrency exchange. I liquidate my crypto wealth, and I get US dollars or euro or whatever, and I use this money to transfer as a payment for the real estate transaction. And the seller might not be even aware that Bitcoins are part of the overall structure. Typically, if you look to offers you see in the internet, here number 2, number B, the mixed structure, I call it dirty BTC transaction. This is what is offered on the market. Yeah. And you should be aware, this means you have to sell your cryptocurrencies with all the possible tax effects, with all the possible problems involved if you want to sell a big amount of cryptocurrencies. So for this, we have to design the real estate contract, and it has specific clauses. We have not the time to go into the details on this. Yeah, we need some experience, yeah, to structure the deal, to have the Bitcoin price clause. Yeah, you know, the Bitcoin price is very volatile, and if you have a purchase price of $1 million for a nice Dubai apartment, what happens if the price of the Bitcoin goes up and goes down? How about mortgages? How can they be implemented if you don't have it in cash? You want to finance the acquisition with a mortgage. What will the government say if you want to use Bitcoin to pay for the transfer fees and for the taxes? Of course, they will say you cannot do this. They will, yeah, and with all this, yeah, it's typically the intention, yeah, to maximize privacy and to avoid too much surveillance and to avoid regulations. Yeah, so if you have a property transaction in the Caribbean and you use, let's say, an exchange in Switzerland, then of course, yeah, these regulatory requirements of Switzerland will influence the whole transaction. Yeah, therefore, if you do it offshore, you will not want to involve a highly regulated participant in this thing. Okay. We have here I have a list of some structural requirements and procedures. Yeah, of course, the question is, what is the scope of compliance? Do I have to request copies of the passports? Typically at the land office, they will ask, of course, for some know your customer tasks. How about the escrow compliance? If there's a bank, what are the requirements of the banks? What has to be done? All this depends on the location, on the parties involved. So you should plan ahead what makes an easy deal and what makes a deal who will not go through. Here it's mentioned smart contracts. Yeah, what you should understand in the moment, there is no real estate transaction with smart contracts. This is a thing of the future, if any. This was crypto property, and now we come to crypto shopping. This is very short. Crypto shopping can mean many things. It can mean just the acquisition of the buying of cryptocurrencies. You can make a sell and purchase in the metaverse, where you have your avatars who are buying this, also called 3D shopping. I don't really believe too much in the metaverse. I think the metaverse is dead, but that's another story. Yeah, there is some gamification and social shopping, which is, I think in this metaverse you find very young people there. Yeah, you find young boys who are playing there. It's not really a serious business if I look at it from a business point of view. And there is this shopping on internet platforms that are typically luxury platforms. I list here some of them. Yeah, this is also a thing of the future because, as I said, the price will go up and then it will be a hot topic. And cryptocurrency will remain the second hottest topic here on the market. And you all know the hottest topic is artificial intelligence. So this was crypto shopping, and now we come to crypto offshoring, which is the most complex thing. And the first three, over-the-counter property shopping, is all where I have to say, yes, let's wait for next year, or wait for end of this year, when we see other prices on the crypto markets. Crypto offshoring should be done today, or better, should have been done in the past months. So what is it? It means crypto offshoring means to transfer crypto assets to an offshore location. Yeah, so it sounds simple. We talked about the types of tokens, and you have the investor with his cryptocurrencies, and he wants to transfer it to an offshore entity, let's say to Panama, let's say to BVI, to Vanuatu, or wherever it is, to keep it there at a different wallet. It sounds crazy a little bit, yeah. So the question is why? Why should I do it? What is the advantage? First, yeah, because the location is relevant. Yeah, location. It makes a big difference whether you are doing crypto transactions here or in another jurisdiction. So, which location is relevant? The blockchain. Yeah, where is the blockchain? I don't know exactly. There are three good answers where the blockchain is. Answer number one is blockchain is outside, it's not here. So in Dubai, there's no blockchain. Answer number two is the blockchain is everywhere. Therefore, the blockchain is also in Dubai. And then answer number three is the blockchain is nowhere. So it's not in Dubai. Yeah? I think the tax authorities, at least, they think the blockchain is everywhere. Yeah, so if you maintain the Bitcoin blockchain, there are 500,000 computers all over the world where the blockchain system is running. Yeah, so I'm sure it's also in the United Arab Emirates here. So the blockchain is everywhere. You can look to where are the miners or the so-called nodes located. Yeah, and many of them are nowadays in the United States. Therefore, there are US courts who say, oh, all this is governed by US laws. You have your wallets, your exchanges. Yeah, the wallet is maybe just an application on your app. It might be a hardware wallet, which is just a piece of plastic. And there are the holders, so the persons who hold the assets. So the location, for what is it relevant? Yeah, there are jurisdictions like Panama, like Thailand. They only tax domestic income. So if the profits qualify as foreign sourced, they are not taxed. Yeah, so it's very relevant. Yeah, where is the blockchain? Are the profits from cryptos, are they foreign sourced or not? Then, of course, we have these other things. I run a little bit out of time, so I want to go ahead with this quite important slide. So what is the issue to transfer offshore? And you should memorize these four terms. Number one, surveillance. Yeah, so there is a lot of surveillance regarding cryptocurrencies. And if you're living in any country, in any jurisdiction, and you know your local tax officer is aware that you hold millions of Bitcoin, yeah, someone might in the night knock on your door. It's not everything like Dubai or like Switzerland. Yeah, there are many countries which are not so super safe. So surveillance is something you would like to avoid. Then we have prohibition. Yeah, if you look to where is Bitcoin allowed and where not, yeah, you see many countries. Yeah, you can find all this on Wikipedia. Yeah, they have a nice map. There are many jurisdictions where Bitcoin and cryptocurrencies are not allowed. Monero is not allowed even here in Dubai, in the UAE. You have the taxation, yeah? And we can talk hours about taxation, yeah? But of course, what bothers us is not so much what is the taxation now, but what will be the taxation in the future. Yeah? And even if you just hold your cryptos, this might be a taxable event. Yeah, the value might be marked to market situations each year. So there might be a huge tax burden which you can avoid if you transfer them offshore. And of course, there are sanctions. Yeah, as you read in the newspapers and all this. So before you start to do this, before you start really advising others, you need really good answers to these four questions. Yeah, number one is, why should I take really the cryptos from my private wallet to send them to some offshore jurisdictions? And the answer, I don't have time to explain it, but the answer is because you keep them on your wallet. Yeah, it might be a different wallet, but the wallet is still in your hand. Yeah? Even if they are transferred to an offshore jurisdiction, even if they belong to a Panama company, you have the private key. Yeah? So if everything fails, the whole structure collapses. Yeah? The nominee you involve, he runs away with the real estate, he runs away with a bank account, yeah, which are linked to the company. He cannot run away with your cryptocurrencies because you, as an investor, you hold the private key and you don't need to be there in Panama. You can do it wherever you are. You hold the keys in your private wallet. So, yeah, what is the point for offshoring? I hope to explain a little bit. Yeah, it was just a rush through it. You just get a keyhole overview on this. Yeah, it makes really sense to protect your assets by transferring them to a location where they are not in danger. And yeah, I said already, yeah, all these nominees, the middlemen, the agents, you have to involve in an offshore structure. They are not really, they cannot get away with your assets. They cannot get away with your cryptocurrencies. They can take your land, your real estate. They can take the corporate's bank account, but not the crypto, not the cryptos. So that's what we are doing. Yeah, we are advising some, not many, some investors who say, okay, I want to protect it. Yeah, and this is what I wanted to tell you about what we're doing. This all is called modern digital asset protection strategies. Thank you for your time. Thank you for your attention. Thank you very much.
Any questions? Or do you want to add to the presentation any points?
Hello, I'm Kevin Fournier. You showed a slide with the escrow agents and people trading, and you don't want to send the money until the you know that the Bitcoin's been transferred. You know, it's kind of like a chicken and egg situation. Rather than using an escrow, couldn't you just use blockchain itself to do that instead of a escrow of an actual party?
We're talking about escrow for the US dollar, not for the cryptos.
No, in the slide that you showed, where there was a buyer and a seller of Bitcoin, and there was a escrow agent at the top, or I think in one slide there were two escrow agents.
No, it was just one slide with a fiat escrow agent, not with a crypto escrow agent. Yeah, you are correct. You can have a second escrow agent for the cryptos, but there are some good reasons not to do it. Oh. Yeah, one is you don't know what happens with the cryptos. You will get maybe different Bitcoins. Yeah, maybe Bitcoins which are on the sanction lists by the US government. Yeah, so what we advise is not to use an escrow agent for the cryptocurrency transfers.
Okay, thank you.
Hi. You talked about crypto offshoring, and I think one of the points that you had put up was that it's good to offshore, but you also mentioned like what is the point of that if it's still part of the blockchain? I don't think I kind of understood the benefit of offshoring when it still forms part of that.
Yeah, these are these four different aspects. Number one, yeah, the surveillance under the EU regulations, under many regulations, yeah, they don't cover the worldwide crypto holders. They cover the cryptos in Europe, yeah, even if the cryptos are on the blockchain. Yeah. The taxation, yeah, it don't covers the EU regulations, for example, for the taxation. It does not cover cryptos which belong to a Panama company. Yeah. And also, yeah, if it's forbidden to hold cryptos, yeah, here in Dubai, it's not allowed to hold Monero. Yeah, but in Germany, it's allowed. Yeah, so if I hold Moneros in my Panama company, it's fully legal. So this makes a difference.
Hi, I have a question with regards to tracing the transfer of crypto assets. So is there a system in place where you can source the asset and the beneficiary also travel with the transaction, and then it's shown on both sides?
Yeah, so if the holder, if he travels, yeah, so if I take a plane to Panama, it does not change anything. Yeah, yeah, so it depends really on the wallet who owns it. Yeah, so there's no general answer on this. Yeah, but of course you cannot say, okay, I make a weekend trip outside of Dubai. Yeah, so I fly to an offshore location, do some transactions, then I come back after the long weekend. This will typically not work.
Thank you. I think it was really insightful. I enjoyed the presentation. I wanted to ask something while you were speaking now, and to comment on, or to touch on Sabina's question. Do you see any opportunity for AML and terrorism financing with crypto? Because from what I'm getting from the presentation is that there is really a big opportunity for offshoring of the money, and I would say a lack of oversight from the regulator. So is it, I hope it's not a controversial question, but I'm just interested to understand what is the opportunity for AML and terrorism financing? Do you think that's something that could be considered?
I didn't understand. The opportunity for who?
For AML, anti-money laundering.
Oh, AML.
And terrorism financing. Because that's basically the key issues that the financial regulator would be trying to, oversee and prevent. But of course, crypto is a little less regulated in most jurisdictions across the world. So I'm trying to understand if is it something that is starting to be worried, or do you think it's not yet a concern?
Yes, in general, yeah, we all professionals that don't want to support anti-money laundering. Yeah? This is not what we are not helping to doing any crimes. Yeah? But of course, AML is more in the interest of the government than in the interest of the private participants. Yeah? So if you have a bakery and you sell croissants, or if you sell cars in a shop, yeah, you don't bother too much if the person who buys the croissant, yeah, who buys the Lambo, yeah, whether he has a problem with the money, as long as you can get the money for it. Yeah? So whether he avoided taxes, whether he has stolen the money for the croissants, yeah? It will not really bother the participants. It bothers the government. Yeah? Therefore, it's a police activity at the end. Yeah? And there are many people who say, we are not the police. We don't do the task of the police. We have to be in line with the regulations, but not 1 millimeter above this. Yeah? We're just doing what the law requires us to do. So we're using a structure which minimizes or avoids such impact of the regulation.